Good morning, everyone. Well, another dip, another buy of the dip. This one was a bit surprising, to say the least. Not that it didn't rally off the bottom, or there wasn't going to rally off a bottom when it reached the area to the left over there, but it came all the way back, and it's holding up this morning. And take a look at charts again. I guess I have a little brain damage here this morning. Sorry about that. There you go. Um, yeah, it's, coming all the way back. So yesterday in the morning, we talked about retracements being, and we've talked this whole way up about the prior bars low from the daily chart, the prior day's low being the first reference point of support. And you can see it just went under here for a moment, but there's no close under a prior bar's low. Now, another concept that we talked about was the possibility of this being a wide range bar ending the move. So, has it ended the move? Well, that's in doubt as of this moment. The fact that prices retrace down and below the bottom of that wide range bar low looked like that was a lock yesterday. Because as it fell, and if you didn't notice, the way it fell was a bit unusual. The comment I made in the green room yesterday was, this looks like some institution was just waiting for that opening bell to ring to just dump. And they sold aggressively, and pretty much everything went down. And as you can see right here, and it fell, and the selling was continuous until it reached this level here of congestion to the left. Looking at intraday charts, you see it initially began to hold there. It made another dip down and then came back, and then it just continued to go up. And the NASDAQ, which held up much better, which it has been, came roaring all the way back. What does it communicate to us when it falls like that, Robert? It means that supply is overwhelming any demand. So there are still buyers, right? But so there were buyers here as well, but it just moved down in a very controlled way. Some might refer to this as a bullish flag type of a pattern, and I'm not going to get into the technical measurements and all of that. It's just more of understanding that it's a slightward downward sloping correction after a momentum move up that creates a void, and this pattern creates support, where a pivot, and then it retests it, and that's a bullish pattern. Now, we talked about this area yesterday, and one of my comments was, well, if it breaks this, odds are it'll go lower. Now, going lower does not mean it's going to go down vertically like the proverbial rock off the roof. No, this means that all of a sudden there was such selling, and it's not just one institution at the time. I mean, stop losses start to get hit, and the whole thing kind of feeds on itself to it reaches a point where others say I don't know that they look to the left. There's all kinds of ways of proprietary measurements of where support is and all that hocus pocus. But, we just simply look over here and say, oh, this is where there's a consolidation. We assume that that's where buyers will step up, and let's see what kind of pattern forms at that location. Now, after a vertical drop like this, the interpretation is, well, that created a void because it went down so rapidly. And this is what I refer to as the weakest link within the pattern. Meaning it's a power move, and power moves are supposed to create support. And this one did. There's a power move. This power move to the downside is supposed to create resistance. And when it did in this time frame, right, it's related to the time frame you're looking at. And so once it did that, it made a pivot low, And then, of course, this now starts to raise confidence levels that, hey, it's not going to go back down and retest the lows. And buyers come in again. So you see where prices are at the moment. And so we've got this bottoming tail from yesterday. So far, trading within that range. And of course, this bar is just starting. But if it looks like this at the end of the day, well, the next thought is, hey, it's extended. There's long risk here. This is a correction bar type of a pattern that supports a long bias above these highs. And that may play out tomorrow. That's yet to be seen. But a correction bar, there isn't one here, but a correction bar continuation pattern at the beginning of the move is super high probability trade, where this one, it could work, but it's not as high odds as one that is happening at the beginning of the move, which is common sense. Now, this one could be a fake out type of thing, but if you're going to trade it, money management is the key, as always. So this is where we're at here. Surprisingly, the power move down being the weakest link, there's no resistance here. It's supposed to create resistance, right? This is the concept of creating support, and it did that. So now it's at real resistance. Let me just put it that way. It's at a real resistance level of, coming up to where it was, right? And we know that there's where sellers are going to be, right? We know that because it fell from here, and that began a little while ago. Now, how far does it go? So as this progresses, the depth of retracement now leads us to resistance here, support here, trading range until resolved, right? Does it stay at the top of the range? If it does that, it's bullish, which will create a green bar like such as such. And we'll see where it goes. McGraw's telling me there were 4350 calls bought yesterday. So what does that mean? Well, obviously it means if you're buying calls and it's above current prices, and he's relating that to SPX, which we can take a look at, 4350 calls, you're not going to buy calls unless you think it's going to keep going higher. And so this was a relatively large level yesterday. I didn't put this here today. And if it can get above that, well, that could fuel prices to go higher. So again, we'll see how this develops today. Right? There's no bar here because this isn't trading yet like the futures. And we shall see what that actually happens. You can see this dipped well down under here and came down into the gap fill and then turned back up again. Now, I wrote in the letter that if yields were to start falling, the market's not going to like that. And that happened. There's the 30-year. And here's the 10-year falling almost vertically now back. And look at the weekly chart. The market got, well, whatever that sell order maybe had nothing to do with any of this. But this is not a good sign, because this whole idea of, Dan's coined this market going up as the crack trade. People are on crack. They don't care that it's high. They don't care about the risk. I've called it a corruption trade because of all of the stimulus that's going on. Whether that's necessary or not, I guess it depends, but on your position. But obviously, it's gone too far. And so now, with all of that stimulus and everything being so great, why is the demand for money drawing back? Interest rates go up because there's a demand for money. And there's a demand for money when people believe it's to their advantage to borrow money for whatever, right? Interest rates are low. Let me go borrow money. Let me buy a house. Let me buy equipment. Let me buy whatever I want. When interest rates go down, such as they are, people are buying bonds, yields are going down, and there's a belief that there is not going to be a demand for money, which is a bearish view on the economy. So there are things going on that we don't hear about necessarily in the news today, but the bond market is communicating to us that something doesn't smell right here. So, until the markets actually break, and there's no break here, right? Just buy the dip. And we just continue to monitor this. Now, the Dow came down. It didn't rally all the way back, right? And I know the Fed is out there, and that's why I call it, buying. That's the corruption trade. Why at this point, if right, which leads into yields falling like this, as to look, if things were looking as rosy as the picture that's been painted, institutions would be doing whatever and yields would be going up, right? That move thing in the other direction. So I've just had the experience over my about 30 years of doing this, looking at charts, is don't think too much beyond the chart. We always look at things, and it's natural because it's human nature to make sense out of what we're seeing, right? When we want to, but we should make sense out of it as it relates to what does interest rates tell us historically? What does the price of the transports tell us historically, and so on, as we look at intermarket relationships? We start trying to pin things down to exactly, going further. Oh, the Fed is doing this. It starts to become brain damage. Yields are going down, and they're going down because there isn't a demand for money. If there was, whatever the Fed was doing, right, they wouldn't be able to overcome what the institutions are doing to join as a force, even though they can print money. Anyway, so as we look at what's happening here, right, with the Dow, beginning of a trading range, we'll see how this unfolds, whether it's a red bar ignored or whether, just going to be the next leg down. The Qs are just going up, Amazon just exploding yesterday. There was news on that. So this is, you see the extension away from any support, away from the 20 MA, away from the 50 MA. And these are, the moving averages are what we call visual aids, subjective reference points. You see over time, the distance the prices get away before a correction can change. You could see here. But the further they get away, common sense says the more traders, institutions pile into a particular instrument and it doesn't retrace and create any support, it's the same idea of a momentum move, power situation becoming the weakest link. So as anything starts to move vertically, bar by bar, the greater the risk of a deeper pullback. And, we see what's happening with interest rates here, and it's being ignored. Don't ignore it. Just, keep it out of the corner of your eye and say, something not right here. And at some point, it's going to come home. And so we'll see. IWM, yes, IWM in the fifth. Will it hold there? I have no idea. I wouldn't think so. I mean, look to the left. This didn't retrace that much yesterday. It came down as soon as the market opened. It just collapsed, and it just started falling immediately right here. And so now it's stabilized at that pivot low. Isn't it amazing? All you have to do is look to the left, and there's like a world out there that wants to sell you proprietary squiggly lines. It's amazing. What a light bulb moment that was for me years ago. So a very small retracement compared to other markets. Will it hold here? We'll find out today. Just looking at the charts, I would say no. Why would I want to be a buyer of the weakest market? maybe it plays some catch up, so if the others continue to go higher, maybe it can hold for a while. But coming down like this, that is bearish. Now, just highs and lows, got one pivot low, two pivot highs, a big nasty drop here. Weekly charts still in a trading range, which, I've been thinking kind of hopefully that this could be a huge winner in the second half of the year, that it can hold in this area and then break out. But the further this goes down, the more that comes into question. And so retracements give us an objective measurement of strength or the lack thereof. So we'll see what happens here. Obviously, it's already almost to the bottom of that big green bar. A break and close down below the low of the green bar. Well, you know what it means, right? Is the yield going down bad for IWM? Well, IWM is small caps, speculative. So if the yield curve is contracting, which is not good for financials, because as it's wider, that's free money, right, for banks. And regional banks are a large part of IWM, as well as biotechs. And so if the underlines are not doing well, the index isn't going to do well. And you've got an intermarket relationship being yield curve being contracting here, that is not a positive for banks. So that's one of the underlying supports of the Russell, being pulled away. Now, as we look at these yields, now look at IRX here. This is green. Now this is still red. So the 5-year, this came down. So in part, I said yesterday, if this held or came down, it's kind of neutralizing to some extent what's happening here with the 10-year falling, because it's going down. So kind of that yield curve, this seems like it's falling faster, so it can still tighten up. But look, if this starts going up and this is going down, it's going to tighten more, and that's going to be even more bearish. Now, the 3-month is up here. So this is very important as far as, look, if you're an investor, swing trader, this is great information to be aware of. If you're a day trader, who cares? Things going up, down, or sideways today, and where can I make money? But these influences of the broader markets certainly are something that, as we look at what's happening in the broader markets, if we're looking long, it's great if the markets are bullish or something maybe showing relative strength. So the transports came down yesterday. They didn't bounce all that much. This is getting on the looks of a bear flag, which is another negative for the markets if this starts to drop. And interest rates going down and this going down historically tells us that something is not right for this bullish view on the economy. Step by step. All right, the Russell we looked at, right? Nasty drop. Why should I think it's going to hold? Maybe stabilization day. Oil, right? Correction day, but solid uptrend. Came down, right? Power moved to the downside. We'll see if it retraces. We don't want to fight the uptrend. Gold, that gave back some intraday, but it's still holding up after the breakdown bar failure. Silver, kind of pretty sloppy. Bitcoin, which we're going to be talking about today in MT Live. Greg is using Robinhood. I didn't even know Robinhood existed until the Reddit. I guess I knew it did, but the amount of people using it, but I've never used Robinhood. But you know what was interesting, Norbert? A week ago, they had the fella on from Interactive Brokers, where I have my account for decades, even when I had my own brokerage firm. He said, Robinhood's great. They're bringing in all these people. But once they realize that they need, I forget how he said it, but let me just, summarize, better tools, if you will, we're opening up 10 accounts a day where people move from Robinhood to Interactive Brokers. So it's a good place to start. No commissions is attractive, and they did force all the other brokerage firms to go no commissions, but you use a platform that doesn't give you all the tools that you may need. Okay, so Blue asked me what I use Interactive Brokers. I use NinjaTrader for futures and eSignal for stocks and ETFs, which both connect to Interactive Brokers. All right, so this is just chopping around here near support, neutral for the moment, waiting to see which way it will go. And I think that's it for me. All yours, Dan.
That's it? You just started.
Don't get me started. I could talk for the next hour and a half.
Prove it.
My wife tells me you just like to hear yourself talk. Be quiet.
All right. All our opens are fine. Put on a couple of shorts yesterday, and none of those are gapping, so I really can't tell. Look at this Dairy Queen DQ. Big move here, and this kind of a little bull flag. It's gapping up here. That could be a 30-minute high trade. But I just wanted to show you, even in a downtrend, that was very, very bullish. Little bull flag right there and a bullish close. Big C has a nice gap breakout. I like that. I like that, both for put spread, directional, but it's gapping up over $3. Try to get a better price. TAN, we said yesterday we were going to buy over today's high. That's gapping up. SAM, space. SAM, I have no idea what you're looking at there. That daily pattern is, my gosh, a picture of stay away. The ones I just showed you 5 that were superior. LSI was on our list yesterday, but it kept rallying, unfortunately. SAM, likes Nova. Gap breakout. It's a watch, but it's over here at the prior highs. I like that big C better. CSIQ, that's a watch. That's a watch. With TAN, it's the sector strong. So let's scan the whole sector. Also, JKS is in the sector. Another bull flag. Look at that. That's gapping up, but that's another bull flag, just like that other one, like Dairy Queen. But this is a bull flag in an uptrend, whereas the other one was a bull flag in a downtrend. S block, no pattern. No pattern, Sam. It broke support, had a breakout failure, gap in the resistance. I got no interest in that. Let me continue here. Marin has been crazy. I would never hold this thing overnight. And now it's gapping down. 30-minute low might be a short with the banks week Greg was talking about. This could be a call spread candidate. And we can scan individual banks too. AMC, we talked about yesterday, AMC and GME, 2 of the Reddit boy things. So this is a topping pattern, and it's rolling over. And GME, I remember telling Debbie yesterday that even though it's not a core, if you fundamentally thought this thing's going back to $20, then this could be the home run entry or short that thing. BIAC, remember this thing blasted a couple weeks ago? And I said, wait for a pullback. Could be the start of our turn. 50% retracement. I don't like the fact that it had 3 overlapping bars here, but that's a watch. CCOP, recent IPO. 30-minute high might be a day trade. It closed at the low yesterday, and it's a bullish gap up going sideways with a price void. So 30-minute high, big C we talked about. There's some action in the Bitcoin space a little bit. I saw Scaramucci on there. Remember, former press secretary? And, you know, it was funny. I was listening to him just pounding the table bullish. And I didn't know he was running a fund. And my brain immediately just thought, well, you are selling this so hard that your pocket's getting lined somehow. And there he goes. Yep, I got a fund. Charge you 0.75 basis points to manage it for you. And then, you know, that ARC lady's coming out with hers. They said she's going to be charging 0.95. She has to be raking it in. She has a good marketing department because people, you know, people are loving the ARC lady. But Riot, I mentioned this yesterday. It's kind of, you know, a little kind of bullish cup and handle buy setup. If it can trade over yesterday's high, I like that. That's in the Bitcoin space. You know, obviously we'll be looking at Mara as always. The other Bitcoin things. Thomas here has a couple. Chewy, Fizzler. Chewy, not a great pattern, but it's a bullish 15 for a day trade. So maybe 15-minute high. Fizzler, another tan stock. You know, when the whole sector's gapping up like it is, you either need 30-minute high if there's still a price void, or you got to put it in a window and watch it pull back. Oh, I just noticed I had True here, TRU. TRU is a 1, 2, 3. My list yesterday. However, Amazon's still bullish continuation today. You know, without me even looking. Okay, so here's the problem. It's vertical at all-time highs. I mean, it was just a beast yesterday. And it's still in a strong uptrend on the 15-minute chart. There's no doubting that. But the higher it gets, and you know, the farther it gets here, you can still trade the 15-minute chart as a day trade. But you know, it's good. One of these times, it's going to be like musical chairs. It's like, you know, people are going to rush to take their profits. But to answer your question, well, I did answer it. Yes, it's bullish, but for me, particularly gapping up at the market open, it just ain't my wheelhouse. It needs to settle down. Like, you know, I would want it to go sideways and then maybe have a breakdown failure. I think you're playing with fire. US RCL. It's weak. It's the whole jets and cruise line sector are weak. It is maybe 30-minute low. Target to 200. Core. My up alarm went off. We bought this yesterday as a red bar ignored breakout. Detective, are you here? Remember we talked about names? And that's what that is. Red bar ignored breakout after a bullish retest. So now I'm going to go ahead and put the stop under this closing breakout low, 135.07. But yeah, we could scan the solar stocks. Riot's holding, tan, gap's too big. I'm watching Big C, as I mentioned.